What's going on, guys? This is another video of the stock market. I want to share with you guys some of the most common patterns that I think it's important to learn and to know about. It gives you a little edge on what you're doing in case you don't know about patterns. This is a very quick explanation of several patterns that I trade, and they're not 100% accurate. However, like I said, if you learn them, all the tools that you gather is going to help you to become a better trader. Now, every trader has its own way of trading. So there's people who trade volatility. There's people who trade momentum. There's people who trade news. There's people who do technical analysis and patterns. And for the most part, I do patterns and technical analysis. Nevertheless, I'm gonna give you some tips that I think that could help you be more profitable. So let's start. This is gonna be a real quick video. I don't want to make it too long. I just want to explain things as fast as I can. Um, so I'm gonna start with the ascending triangle. So the ascending triangle, as you can see, there's an uptrend going on to the upside, and there's a resistance level right here. How do you create that resistance? Well, first of all, it has to make it a top, because if the stock keeps going up, you don't know where the top is. So once it creates the first top, boom, and then it's gonna create a low, a support line. So right here, boom. Notice how if you put a straight line down here like this, from where it is at over here, it's almost 50% of, it gave back 50% of its whole green. Like if you just imagine there's a whole green line right here, and it always comes about 20 to 50% down again. So this is a part where you can come in, boom, especially if you're trading penny stocks or whatnot, even options. I usually trade options. So even if dollar from here to move, a dollar move is good depending on how much capital you have. So never take for granted this, especially this penny stocks, which or low stocks. I mean, low float stocks, because usually they tend to pop like right here, and they move really quickly. But that I'm not gonna talk about it right now. I just want to show you that this pattern works. It's not like I said 100% accurate. However, it's gonna help you become a trader, better trader. You see the 50% right here came back. This is the pullback, and then you can add, making it, you can add here or right here for the second for a rebound. Boom, you see that there's resistance right here again. So now there's confirmation that there is double top right here, same pattern. Now there's a triple top, but there it's making higher highs or higher lows, actually higher lows. And you see that's ascending. This is an ascending triangle. It keeps going. The support keeps going up, and the resistance keep staying here. So after this, also something very important that it's not here, you got to check the volume. The volume is very important, because if it doesn't have enough volume, then guess what is going to happen right here? Is going to start crashing down. But we'll talk about that one right now. I'm talking about the ascending triangle. So you got to check the volume down here, and it pushes forward to the to continue the uptrend. So that's the ascending triangle. I really like that one. So the descending triangle is exactly the same, but the opposite direction. You see downtrend right here going, and descending resistance right here, and the support. Same rule applies. Now you can see that it tries to push higher, and it can't, and it starts going lower. Not higher like over here. Major difference, guys. So descending resistance, there's a support right here, and then once it breaks this, try not to trade between this, to be honest, with this trend. I mean, you can do a lot of money. It's just like I said, it depends on how much capital, because from if it moves from 450 all the way to 6, even though it's a descending resistance, you can still profit from here to here. but it's way more difficult because there's more potential. It's like risk reward against reward, you know. It's like you know that's coming already downfall. It's pushing up. This is where you pull the trigger to short the stock and it continues to go down. Now this looks very easy when you just look at it this way, but when it's actually happening, it's very difficult. You start thinking too much. So once it breaks this support of resistance right here, it's like this one is as well. Like here, once it broke that, boom. Once it broke the support, boom. And once it breaks support, boom. So that's the ascending triangle, the opposite of ascending. Um, a falling wedge, the reversal. Honestly, when I see a falling wedge, I rather play the reversal than play the channel or the falling wedge, basically. So the reason why is because I feel that when the wedge becomes so tight, it explodes. Like I said, that's why it's highlighted over here. In the circle, the amount of volume that it came in, boom, exploded. Look at the volume that was right here, right before it exploded, and that's the reason why it exploded, because of the amount of volume that it came with, uh, making it break the falling wedge reversal, the wedge. So there's a breakout. Why do you want to get you always want to get the at least 2 points. So that's why it's right over here, the trend line, and right here, boom. And then this one, it didn't even pop. That means that it's going to go lower. Boom. And the MACD shows too right over here. The I couldn't push higher. So there's things to see and to watch. Like I said, I honestly rather play the reversal right here on the volume to the upside. That's just me. You can be very profitable. Once the stock, let's say you see the stock falling right here, always wait for a bounce back when it has fallen this much, that fast. Unless you see it, you know that it's right here. You see that there's more potential for the stock to drop, depending on the news, which is very important. Um, However, I always try to wait for a bounce like right here to short it. I always try to wait for a bounce and then or perfect time right here, boom, right here we're sending. I feel that then the falling wedge is always a reversal and to the upside. So make sure there's volume. Make sure that the volume is bigger. The green volume is bigger than the red volume for the breakout. Now the rising wedge is like the rising wedges. That's why I said rising wedge reversal. So you see the neckline right here, boom, boom. All right, so we see a rising wedge going towards the upside. Boom. Once it breaks this resistance, I mean the support, sorry, breaks down. Boom, boom. Now it's gonna retest the support right here. I mean the resistance. Sorry about that, guys. And you can see it collapses again. So that's a rising wedge reversal, which is the opposite. You do see like like there's a green arrow, I mean red arrow right here, pointing with a high volume that the stock is gonna probably move lower, and it was this one. I know it doesn't look like a lot of movement, but it is, especially in options if you're an option trader. So great opportunity. This is usually the stuff that I use. Bullish flag, I like this one. It's like the flagpole number one right here, and then the bullish flag. This is actually a bullish flag, even though you think it's not gonna break out. Nevertheless, you gotta, like I said, you gotta see the volume. You gotta see the volume because this doesn't mean that there's gonna be a bullish flag. Um, Even though it's showing that it's an anticipation. Now, this is the key major point right here. That's why it's circled, and the retracement is right here. Boom. Like I said, like if you put like a thing down here all the way over here, it's always almost 50%, a retracement of 50%. That's when you want to go in 50. Now, if it loses 50, let's say you get here in here and it loses all the way all its gains on higher volume, get out. Take it as a loss. But don't lose more money than what you need to. So perfectly right there, weighted, boom, the 50% retracement, enter at the bottom of flag on the breakout above high. So this is you can either choose something. Um, you can choose to enter right here or right here to see if it's gonna break out from the high, from the previous high. Um, Now, well, I'll talk to you in a little bit about that. So you want to enter. Personally, I like to enter right here because if it doesn't break resistance, I can still get out on a profit. Now, how do you know? Like, how do you know that you're gonna get in here? Well, the thing is, like I said, if it holds at least 50% of its gain from the flag, let's say the flag was here, the flagpole, and it supports this 50%, there might be a bounce of it. If it doesn't, if it goes more than 55, I would just exit out at a 5% loss. Um, because it hasn't confirmed that there's a bull flag. But I like the bull flag. You can see the breakout right here, price target based on flagpole. Boom, that's it. You know, that was your whole profit right there. Bearish flagpole is basically the same but a reversal. There's the flagpole and the triangle, boom, and it's gonna go lower. Same thing, but the opposite way. All right. Channel down is almost like a ascending triangle and descending triangle. It's a little different. This is the main trend line. Remember, you want to get major points of resistance and support. One, two, three, at least 2 to 3. You want to make sure that the more resistance it has and the more support, the more valuable the trade could be, or the more accurate it could be. So 1, 2, 3, 4, 5. 5 here, boom, and 1, 2, 3. As you can see, it starts like looking down, and then after this the channel, it breaks down. Boom. This is the time of profit. Boom, right here. This followed by an upside, like a like the ascending triangle. It's like kind of it does the opposite. Once it's done doing its thing, it obviously gonna do the opposite, and it boom reversal right here. That's what I was talking about. The reversals is very important. And same thing with the channel up. This is very common patterns that you need to be aware of. And like I said, it's going to help you become a better trader. Right here, channel. And 1, 2, 3. 1, 2, 3, 4, 5. All right, so it starts going up now. Once it breaks from the channel, bullish, where, because for instance, let's say it didn't break the channel, then and it starts going this way, then it could happen. There's a reversal on the thing. It doesn't have to follow what is going on. Like if it's going, it looks like it's going higher, so you think it's going higher, and it makes it higher, higher lows. So you're gonna go. You already thinking you're gonna be bullish on it, and it makes sense. But it could happen that it didn't break out. It starts coming down, and now it's a reversal on this channel up. So be aware. That's why I'm saying it's important for you to know that the major resistance, if it doesn't break right here, if it doesn't break and it goes down, then down is gonna go. So because there was an breakout right here, it's continuing higher. So just watch for that, because a lot of people are saying, "Oh, those don't work." Well, I think it does work, but you got to be aware that there's resistance right here. So if you buy into this, thinking that there's gonna be a breakout and then it collapses so hard, that's where you make your mistake. You shouldn't be buying right here. Only if it breaks out, you buy it. You know, only if it breaks. But as you can see, you can, and you gotta make sure that the volume is strong as well. So channel up. All right, this is one of my favorite ones. Classic head and shoulders reversal pattern. So this is really easy, and I like trading on this one because it's almost, I want to say 90% accurate, but it just depends on, like I said, nothing is 100% accurate. But there's the left shoulder right here, and then the head and the right shoulder and the neckline. So when you see this type of pattern like this, that means it's gonna go down. Boom, boom, neckline, head and shoulders. Beautiful, beautiful pattern. And the the inverted head and shoulders is basically the same but reversed. So you can see right here, the shoulder, head, and the right shoulder for a breakout, neckline right here. It's perfect, beautiful. So what are options? An option is a contract which gives the buyer, the owner, or the holder of the option the right but not the obligation to buy or sell an underlying asset of instrument at specific strike price or specific date, depending on the form of the option. So I just wanted to make sure that you guys understand a little bit about this. So right here, as you can see, every time that I place something right here on the bottom of something, like of each line, there's something going on, and that is the ascending triangles or descending triangles. And as you can see, you can see that this patterns work, because that's the whole reason why I want to do this video, because not only I want to tell you about these patterns, but I want to show you that they actually work right here. Boom, descending triangle. There's a descending triangle right here. Boom. There's a resistance right over here. What happens when it hit resistance with a big resistance right here? It started going down. Boom. Starts going down. Starts going out. When it jumps, there's resistance right there. That's why I like using this ones. It automate. This platform is TD Ameritrade. Oh snap. Oh well. There it is. So you guys have my account number, so I'm gonna stop this real quick, and